Micron is a case where we're not really going to know whether the bet worked or not until the dust settles. So we got to let the bet play out. But I would just say this, that the cyclicality of the memory business has gone down a lot. DRAMs used to be a terrible business. There were more than a dozen players. It's now down to three players. Three players have over 95% of the market. And one of the things I had a discussion a while back with Charlie Munger. I didn't directly discuss Micron with him, but I discussed oligopolies and especially oligopolies where they can't. So one of the things about oligopolies is that if you're, let's say, Coke and Pepsi, you can't sit in a room and set prices. That's kind of antitrust violation and all kinds of other illegal behavior. But as long as you don't engage in a whole bunch of irrational actions, oligopolies can do really well. So I asked Charlie about kind of the nature of oligopolies, and he said that Buffett had studied a long time ago Coke and Pepsi bottlers in wide number of regions in the US and around the world. And he found that in probably 95 or 97% of cases, both the bottlers made good money. Basically, these are strong brands and people have preferences and such. It's not infinite pricing power. If Pepsi is on sale and Coke is really expensive, you might switch. But in some geographies, maybe the 3 to 5% of geographies, one of the owners decided that they wanted a much larger market share. And so they engaged in price wars and a lot of other behavior to try to take market share. And of course, your competitor is going to react to that. And so you ended up in some markets where nobody made money, neither the Coke bottler nor the Pepsi bottler. They were just bashing each other, trying to get market share. Nothing really happened. The consumer won, basically. But in 95 or more % of the market, there was rational behavior and there was no collusion or illegal behavior in these markets. But both players made money. And what I see with Micron and Hynix and Samsung is that I was really surprised originally when I was looking at the businesses about the frequency with which they speak to the markets. They seem to they have the quarterly calls, then they'll have some investor conference and they'll do updated guidance. So there's a lot of stuff going on. It's just not 4 times a year that they're telling the investing public what's going on. And it took me a while to realize that they're not talking to me. They're talking to each other. So if they go on a rooftop, if Samsung goes on a rooftop and screams and says, my capex is going to be 20 billion this year, and I'm basically going to produce so many chips, for example. 2 days later, Micron will make a similar announcement from a rooftop saying my capex is going to be 10 billion a year this year, and this is the number I'm going to produce. And then the third guy, SK Hynix, would say that too. So they're really talking to each other, and it's legal to talk to each other. United and American Airlines, American will reduce fares on some route, and 5 minutes later, United will reduce the fare as well. So as long as it's not done in a room colluding, and you're doing it through press releases or whatever else, saying, hey, listen, basically the unsaid message is, I'm rational. I'm not trying to take market share. I'm happy where I'm at. And I met with all 3 companies, 2 of them are in Korea. And when I met with Samsung, and I told Samsung, I said, look, it used to be that Samsung was the low cost producer. So they actually have used to have a cost advantage versus the other 2. So I told Samsung that basically, if you wanted to, you could reduce prices to the point that the other 2 couldn't match you because they would start losing money, and you could take more market share. And we hurt them. So Samsung's response was that bad things happen to us when we go over 50% market share. So they said, we really don't have much interest. He said, our customers like to have second source. They like to have large second source options. And the regulators and everyone else will not look kindly upon one of the 3 becoming 80% of the market or something. So Samsung said, we are at 50% and we want to stay at 50%. And basically the other 2 pretty much said the same thing. So now what's happened over the last few years is that Micron used to be always behind by a year or 2, and they've caught up. Now, I don't know how long they can keep that. They've actually run ahead of the other 2. They have a little bit of an edge right now, but I don't know if that's sustainable or how the other 2 what that looks like in 3 years or 5 years. But the bottom line is that we have three cooperative players, like 95% of the Coke and Pepsi bottlers. The memory business, there's really no kind of alternative to it, at least as far as I can see. Now, this is technology and there can be disruption. But the way software is written and the way the chips work and the way logic chips talk to memory and all that, that has not changed in more than 60 years. When I was going through my undergrad, I'm a computer engineer, and I studied the architecture of the IBM System 360. And later, I actually worked on firmware and chips and hardware and all of that, and used a bunch of DRAMs and so on. Later, when I studied the architecture of the Intel 8386, which was a chip in the late 80s, basically these two chips were these two architectures were 30 years apart. And there was no difference. They were identical. The only difference was size. And now, if you look at computing today, I haven't kept up with it the way I used to keep up. You've got some changes that have taken place because of ARM holdings and people doing specialized processors, and Apple's doing its own processors. People are not taking off the shelf AMD and Intel products. They're trying to get more specialized. So there's been some change based on the nature of the computing they're doing, searches Google is doing, and that sort of thing. But for the most part, these architectures have not changed. And it's unlikely to change in the near term and such. So I don't think there'll be a fourth player in this market. And I think even the NAND market might consolidate at some point, and that might become an even better business. So these are all the theories behind why Micron makes sense. And once you get all this growth that's going to be coming from AI and data centers and everything else going on, self-driving cars or assisted driving cars, when we have all of these things take place, it's a tremendous surge to the volume of memory needed. Just destination analysis. Basically, what they think will happen in the industry is that the memory guys are making about 150 billion a year top line, all three of them together. And that 150 billion, they think, goes to about 300 billion in 7 or 8 years. And we don't know whether that'll happen, whether it's 250 billion or 350 billion or where that number is, but it's likely to be around 300 billion, maybe higher. And Micron might be 75, 85 billion or something thereabouts, maybe 100 billion of that number. And so then you just say, could they be banging out something like 20, 30 billion a year in cash flow? And yeah, I think they could. And by then the market might recognize that it's not the old DRAM business anymore. That these guys, basically, even in downturns, they don't lose money. And they still skim through. The cycles used to be very high and low. We've already seen the cycles are very muted. So basically, my take is, okay, at some point, if the market believes that Micron can produce 20, 30 billion in cash flow, they will value it accordingly. So who cares about the rest? So I'll give you another example. The company I invested in, it's in India, and it's our oldest position. I bought this stock in 2015. It's a company called Rain Industries. And at that time, when we bought the company, the market cap was 200 million. And it's a very cyclical business. They provide parts to the aluminum industry and so on. But the thing is that I thought so this was a company doing 2 billion in revenue with a market cap of 200 million, 1/10 of sales. And I thought the odds were very good that they would come a single year when their cash flows in 1 year would exceed 200 million. And just like with IPSCO, I said, when that happens, I just want to see what the market does. What is the market going to do when they produce 200 million in cash flow? And what happened is in 2018, exactly that happened. They had a year that they produced 200 million cash flow. And the market took the market cap to 2 billion from 200 million. It was a 10x in less than 3 years. And of course, by then, what happened is I fell madly in love with the company and the manager and all of that. And I thought they would keep going because he was doing so many good things. And then COVID happened. And in 2020, it was down to, I think, about 300 million or less in market value. And now it's 700 or 800 million. But I think that it'll again go past that 2 billion. They'll again have a year where they'll make over 200 million. And this time I said, maybe I'll pay more attention and we'll see if we need to get off the bus at that point. But basically, let's say that happens by 2025, 3 years from now, probably high probability that would happen. And if we exited at that point, it would be a 10x in 10 years. Nothing wrong with a 10x in 10 years. Perfectly fine. Good for your health.
in general, you don't really care about next quarter or next year.
Completely irrelevant. I think the next quarter is when I run a business, I don't care about the next quarter. When Jeff Bezos runs a business, his arbitrage is that he's looking out 7 years, that people are not willing to look out 7 years. He's making bets which may not pay off for 10 years. And so whenever you're making an investment, your framework has to be the same as the guy running the business. So the way Jeff thinks about the business is the way the Amazon investors need to think about the business. And if they don't think the way Jeff does, then they're not going to really understand the business, not going to be able to hold it long enough, are going to, for the longest time, Amazon had no cash flow. They're pumping everything into growth. And so if you didn't understand that, and you didn't understand what game he was playing and the long game he was playing, you wouldn't get it. So it is completely irrelevant to me what happens next quarter to Micron's earnings. It's not even something I bother to look at. It's irrelevant. I don't know whether we'll get to $500 a share, from your mouth to God's ears, but I think we could get to a couple of $100 a share. Sure, no problem. And we bought in the 30s. And if we get to 200 or 250, he's buying back stock and so on, then it's a decent return. It's